As we speak now, copper has become the commodity that has gained the most in 2025, pushing cobalt to the second place. This is because the Donald Trump administration in the US proposes to impose a 50% tariff on the red metals imports. But things are not as rosy as they seem to be. Namaste. Though copper prices have gained primarily on the Trump administration's proposal, analysts say the objective is not clear. The US administration aims to encourage the development of new mining projects within the US and support the domestic copper industry. However, the US produces only about 5% of the world's copper output and has seen a 20% decline in production over the last decade, says Eva Manti, Commodity Strategies of ING Think, a unit of Dutch multinational financial services firm ING. Last year, US copper production fell 3% following an 11% drop in 2023. Stagnating production has left the US increasingly dependent on the imports of the crucial metal. Increasing the cost of the imported copper will do little to change this, says research agency BMI, a unit of Fitch Solutions. Building new mines in the US can take up to 29 years due to a lengthy process in getting permissions. Previous tariffs on steel and aluminium did not lead to any increase in domestic production of the two metals, says Manti. The situation has left US financial consultancy firm JP Morgan cautious on LME copper prices for the rest of the year. LME copper prices are expected to slide towards $9,100 a ton in the third quarter of 2025 before stabilizing around $9,350 a ton in the fourth quarter, according to Gregory Scherer, head of base and precious metal strategy at JP Morgan. According to the Australian Office of the Chief Economist, a gain in copper prices is expected to be minimal in the current half as uncertainty over the global economic outlook weighs on copper demand. The Trump tariffs will be bearish for LME prices, with the wave of copper rushing to the US likely to stop once the tariffs are implemented. At that point, US buyers are likely to start working through their inventories, says ING Think's Manti. Currently, the copper 3-month contract on the London Metal Exchange is trading around $9,600 per ton. On US COMEX, it is quoted at $5.50 a pound. Currently, COMEX copper prices are at least $2,000 a ton higher than the quotes on the London Metal Exchange. BMI says higher prices might eventually encourage increased output, but only over the very long term. Opening a new copper mine usually takes 15 to 20 years. But given the inelasticity of demand, a tariff on copper would almost certainly push up US domestic prices. The tax would be paid by American consumers rather than foreign producers. Since copper is a key input in the manufacturing sector, this will raise the prices of US-made manufactured goods and reduce US firms' competitiveness compared to Chinese or European rivals. The impact will probably be largest in the automobile and electronic sectors, says BMI. The tariff might even hurt the US copper refining sector, since a widening spread between the US and world copper prices will encourage exporters elsewhere to redirect finished copper products towards the US market. Manti says a 50% tariff on imports risks demand destruction. This risks higher inflation and costs for US manufacturers without a domestic alternative being available. Probably, BMI says the tariff threat is a negotiating tool rather than a serious proposal. The tariff will likely be watered down over the coming weeks, says the research agency. The bottom line is that sooner or later, copper will begin its climb down. That's it for now. Keep smiling and be happy. This is Subramani Mancombu signing off. Good luck.